Hey, all my Facebook friends. This is Kenn Renner here in North Austin. I'm in my North Austin music studio because we are in the live music capital of the world. And I just want to share a couple things with you that I learned from one of the top economists here in the Austin area, Mark Sprague from Independence Title. He's their chief economic forecaster for the market. And so it was very interesting because we're all kind of wondering where this market's going now that we've been 3 years with less than 3 months supply of homes in the market. And so, as we know, these things can't always go on forever. But after listening to the chief economist, I was pretty impressed. I'm really bullish on the market, even more than I was before. Of course, I've always loved Austin real estate. I'm an investor. I've helped hundreds and hundreds of investors buy houses. I've also helped hundreds and hundreds of home buyers buy their first home. But anyways, Mark Sprague, the economist for Independence Title, said in his recent presentation was that we have the fourth best economy in the entire nation. And we also have the number 2 job growth in the entire nation as well. So there is really the median price right now is about $260,000, and so that's still incredibly low. In fact, what he said was that the home prices in Austin are at the same level that a California median price was in the 50s. So we've got a lot of room for growth, a lot of room for price appreciation. So what I'm looking at here, he said. You should be pricing your home at 95 to 100% of median price in the neighborhood. It's per neighborhood too, and that's something to remember. Is that it is very neighborhood to neighborhood. It's very micro market in this time. There are certain areas that are red hot in Austin, just as there is around the nation, and there's certain areas that are a little slower, and we're starting to see that seasonally. As a real estate expert, I'm seeing the seasonal time come in where things are taking a little bit longer to sell. But Mark, the economist, said also about the national economy. He says that the national prices are, compared to Austin, are still much higher overall in the big major markets. So if you're a company and you're trying to move your company into an area where it's more affordable to live, where you can pay your employees less and they can have a better lifestyle, that's why we're seeing major corporations moving to Austin. According to Mark, the economist, he said that there are 5 major corporations looking for headquarters here in Austin. And looking at all the new development downtown, I mean, there's crane after crane. There's so much new office space being developed. And, you know, those guys don't build the projects unless they know something is coming. One of the harbingers that I saw recently was the fact that Amazon has built 2 fulfillment centers, one in San Marcos, 855,000 square feet, which will be coming online shortly. Another Amazon facility in the Selma area, which is just south of San Marcos, in between Austin and San Antonio, a 1.2 million square foot facility. So they're preparing for the growth that's happening in this area. So let's talk about jobs. They said that there was 32 to 33,000 jobs that are being created in the Austin, Texas area. That's a huge number. We're number 2 in job growth in the entire nation. We were number 1 for a while. I'm not sure who is number 1, but it's good to be number 2 in job growth. Seeing steady growth is what he's saying. This was an interesting comment that he said, coming from an economist, that we are the most undervalued hard asset in the world. Texas property is, what he said, was the most undervalued hard asset in the entire world. He was talking about comparing it to commodities and comparing it to real estate all around the world, and said that we have really bargain values here. So it's a good time to buy, good time to invest. He says we are not in a bubble. There's going to be appreciation rate predicted next year is between 4 to 6%, with 5% probably being average, which is normal. But in the lower end price point under 250, he said that there is going to be 25 to 35% appreciation rate over the next 3 years. That's a pretty fast clip. That's double-digit inflation, and the reason is that because our affordability, that you only have to make $60,000 a year here to afford a medium-price home, whereas in other parts of the country like San Francisco, San Jose, you have to be making closer to $160,000 to afford a medium-price home. All right, so good news, we're not in a bubble. Oh, about the Amazon facility, it's pretty interesting. He said that Amazon just bought 27 747s. There's something going on with Amazon, I'll tell you that much. They're poised to take over the whole retail market, or a good portion of the retail market. Let's see. Another good stat that he gave us is that 40% of the market will never own a home. So 60% of the market is a equilibrium rate between homeownership and rentership. So I know in our market, I've been looking at the rents, including me being a landlord. We've been raising our rents, and it's super high, super expensive. Not compared to some of the coastal areas, but it is a high price to pay to rent in Austin. That's why we're seeing such a boom in prices around here. And people getting out of their rental situation and multiple offers, especially in the low end. And that's my specialty, is the first-time home buyer and the first-time or multiple-time investor, buying these homes that are expected to not only increase not only in rental market value but also in their sales price value. It's a very safe market. I've been doing this for 30 years, and I've seen the market trends, and I'm really hoping that there will be a lot of people who've owned homes that have a huge amount of equity or investment property, other parts of the country, like California, New York, and those appreciated areas, that they think about taking maybe some of that equity and doing what's called 1031 tax deferred exchange and bringing it to our part of the country where things are going to be more stable and are much more apt to stay level. So the Economist also said that the inventory in luxury market is gone to about 14 months of inventory. The luxury market is the harbinger of what's going to happen to the economy, housing economy, in the near future. And so what we are seeing is we're going to see a shift. We're going to see a shift in housing values, but the higher end is really actually a pretty good bargain. It's time to go out and look at $1 million houses. If you want to buy them now or in the near future, it could be a good time to look at those. New homes, new home prices. This is an interesting stat. There were new home prices that were 25% higher than resale prices. And I actually seen that. And in other words, a home that's 3 or 4 years old in the same neighborhood, sorry, lost me for a little bit. New homes that are competing against a new home builder, believe it or not, I've seen prices 15 to 20% higher for a new home as opposed to a home that's just a few years old. So we focus that on both our first-time home buyers as well as our investors, is to look at homes that are not just new, those are also good, but also ones that are a few years old. All right, so the average time on the market, or for average time hold time for a homeowner now, it used to be, everybody said 5 to 7 years, that you'd hold a home for 5 to 7 years. Reality is that now it's 9 years. It's gone up longer. People hold on to their homes, their primary residences, longer. And in Texas, believe it or not, and this was news to me, 11 years that most people hold on to their homes on average in Texas for 11 years. That means that people don't move as often. That means there's less homes to buy. So that's another crusher on the inventory too. Austin's still is probably the best buy, especially in the technology sector. And let's see, consumer confidence. So why are things slowing down a little bit, just a little bit in our area? We've gone to 2.9 months supply of homes on the market. An average supply of homes for a equilibrium market is 6 months. So we, according to the Austin Board of Realtors, we've been under 3 months inventory for the last 3 years, every month. So that means if we stop selling, if nobody put a home on the market today, we only have 3 months of inventory. And part of what that has to do with, the numbers are even skewed from there, is that there are home builders that will put a home that's not even built in the MLS, the multiple listing service, that's not even built yet. So that's really kind of we call shadow inventory. It's inventory that eventually will be on the market, but it's not on the market now. So once again, you have to study these things and make sure that you know where the best place to buy and the best place to throw your dart. Is the market slowing? Yes, and part of it has to do with a little bit of, believe it or not, consumer confidence. And there's not as 2013, 2014, there was a lot more. Well, he said the consumer confidence level in Texas at those years were 135, which is really high. It means people feel flush. Right now, it's just hovering just above 100, which is still great, but that might be why we're seeing a little bit of shift and a little bit of slowdown in the market. Very stable economy, and there's 10,000 companies in the last few years have moved from California to Texas. That's a pretty big deal. Okay, so one thing he said was, we're not seeing always multiple offers in every situation. Not seeing that the average time on the market's 42 days on the market, and so that's a pretty brisk movement. We're seeing a seller's market still, but we're not seeing a stupid market. People are not looking at wanting to spend stupid money and bidding these things up way more than they're worth. Right now, our interest rates on FHA loans, Federal Housing Administration, are 3.125%. If you haven't refinanced, or if you're thinking about buying a house, or you're thinking about having your kids who are going to college, look at housing situation. 3.1% is the current interest rate. That's almost like free money. All right, so let's see. The other thing I learned about his idea on pricing strategy was don't price a home up here and then do price adjustment strategy. I actually have to do that sometimes, only because my clients want to price their house way up here when it should be down here. So it's a question is that you're either going to take the listing up here or walk it down. The bottom line is people will, especially when the market shifts later on the next year or two, they're going to start watching those price drops. And it's going to be, it's better to price it right to begin with. That's the whole bottom line. All right. And let's see. There is no ego pricing. And there's really going to be not really any slowdown over the next 12 to 24 months in our market. So I would encourage you to, if you're interested in knowing more about real estate, I do have a home buying crash course I teach every weekend. It's called homebuyingcrashcourse.com. In fact, we're giving away some ACL tickets. As you can see, I'm a musician here in the great state of Austin, well, the great city of Austin, Texas, live music capital of the world. And it's a great time to get out there, look around, buy something that's going to work for you and your family. My home buying crash course is homebuyingcrashcourse.com. I appreciate you taking this time to listen to a little bit of the economic forecast for our area, and I enjoy the Facebook Live. As you know, I have the number one. You may know that I have the number one YouTube channel in the world, and now I'm leveraging Facebook as a way to make it really easy. This is really easy. I just set up my cell phone, start talking, start giving some great information that I learned, and sharing it with you. This is Kenn Renner signing out, 512-423-5626. Appreciate it. Have a great day.